Good afternoon. My name is Scott Rowe, the Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. All right, at least we have the Fed behind us. They're going to keep rates low. Woo! I think the market's kind of sick of hearing that. You know, they were ultra dovish, and I don't know. I think there was a bit of uncertainty when everyone was listening to her talk, but as they hear her continue to just go back on prior statements, change their mind, change their mandate, throw a lot of confusion out there, I think the market finally said, you know what, we're going to wait till Brexit. There's no reason to have risk on. And lately, the technicals have lost momentum. So, I posted a chart on Twitter this morning showing you how if we can get above yesterday's high, we could hit some resistance. The moving average is curling down. Not a very compelling trade, but if we break above it, close below it, you know what, get out of the way because, some of the oversoldness that we had as of yesterday was out of the way. So anyway, use my freaking charts as a roadmap because it could be helpful. First of all, here was your breakout failure, boom. Okay, then your ascending channel broke to the downside, boom. Then yesterday, the market had the benefit of the doubt for a bounce. This is where that descending channel broke to the upside, so why wouldn't we pause? Paused, you take a closer look here. We talked about in the morning call and in my note that if we get above this, we can get a push, but not to expect much, that there's a boatload of resistance right ahead. I said 209.20 to 209.40, where we go? The high here is 208.85, so that correlates to this, which I guess the spiders. Okay, here you go. That's what I was talking about. All right, into the old resistance that or support that becomes resistance. Get above this spot. Boom, went into that zone and basically failed right after the first minute of the actual comments, etc. And here you are. So yesterday went home with like 5 or 6 longs. Today, nothing, because we went above a prior pivot, came back below. That's my sell signal. If today wasn't Fed day, I might have even gone out short. But because sometimes you get a reverse of Fed day, or sometimes when you have $1 billion to sell on the close, you get a little reversal, I'd rather be flat. Because at this point, we're still, not broken, but, in a little bit of a retreat land where, again, like I showed you with the SPX, you had this breakout failure, which was sell signal number 1. And, we held the 50-day on the first touch, but then, again, it's sell signal into resistance, and things don't look that pretty. The Qs, the same thing, basically gave you a small little push above a prior high, okay, then engulfed it in the last little time period, and now I don't know if it's going to hold the 200-day. It did it the first time, gave you a little bit of a bounce. Second or third time, may not be that easy. This has been showing some relative weakness. Look how the spiders made new 2016 highs. The Qs did not, showing you relative weakness, so you got to be a little careful there. And then I look in high beta tech land. I don't see anything so awesome. It went from maybe there's leadership there, maybe there's breakouts there, to, can they hold the 21-day? So if you look at Amazon, nothing special. Okay, it's still hanging around, but I think that you have to be a bit careful. If it breaks this 21-day, it could be a little bit of trouble. Google, nothing special also. Basically, you have this uptrend still intact off the lows, but still, vulnerable as it's been in the penalty box since last quarter. As long as this stays in there, maybe there's a chance. You have this tight little wedge pattern here, so we'll see which way that breaks. Facebook, showed a little strength yesterday, did nothing today, still below this gap, below the earnings gap. So there is a chance that this could be somewhat of a bear flag for continuation to the downside. So I would be very careful there. Apple, I came in long, I sold it up 60-70 cents, and now it looks like this area could be vulnerable. So I am not long it overnight. It's getting rejected at the moving averages. Netflix, a whole lot of nothing going on here too. This 4-day range, okay, remember this move boom to boom. Now all of a sudden it's trying to hold here. We'll see if this is a bear flag for continuation to the downside, or can it try and break above this. At this point, the moving averages are still rejecting price. And then you have the banks. The banks have been just truly horrendous. Ever since that poor jobs report, they've been for sale. Hard to rally too much when you have Goldman Sachs almost near the lows of the year. Lows of the year. Below the 200-day for most of the year. So that's showing you some extreme caution there as far as this is supposed to be one of the best banks in America. I guess not. Anyway, JP Morgan was up and kind of failed at the end of the day. It too is now on the 200-day, so you have to be a bit careful there. Oil was weak all day, had a chance to rally, on that number at 1030. It tried and failed. This trend from the lows is still intact, but this more accelerated trend broke when it went below the 8-21 day. So, some momentum was lost there. And, I'm just not seeing reasons to be so involved. Okay, I was trying to be involved last week when it looked like maybe we could, have a move above 2100 that could be sustained. Once that didn't happen, got sideswiped on Friday. Yesterday, the oscillators hit minus 60, held the 50-day, held that prior breakout, made sense to try and catch a day and a half long, and that's what today proved to be a day and a half long. Maybe if we closed above yesterday's high and held in there, we could have a bit more of a retracement, but it didn't happen. We had a red dog reversal to the downside, so hopefully you use that as your guide. If you use your intraday chart, let me just show you what happened here. They held it and held it and held it until they didn't. So using your intraday charts, I was trying to potentially maybe be long here, and then thank goodness I got stopped out on this wide range bar. You could have waited and got stopped out here, okay, and there it goes. So tight, 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 indecision, indecision, and then pow. Okay, so again, the day after Fed Day might be a reversal, but I'm not playing long for that, and at this point, I would be kind of light short just in case that's the case. Just in case that's the case. As of right now, though, no 8-day, no 21-day, struggling for the 50-day, so that to me is caution. Brexit is until late next week, and it's only Wednesday, a lot of time between now and then, so I would be low risk and just try and find some day trades, put together some tactical cash flow, and then when there's more clarity, swing the bat a little bit harder, straighter, and maybe the bull will go longer. That's about it. See you tomorrow morning. Have a good night.